The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, 877-927-6648. Here we go. Thank you to our hosts. Great shows as always. What we're looking at is a Dow up 2 at 20,824. S&P up 0.54 at 2367. The comp index is up 2 at 5847. The VIX is up 13 cents at 1160, still under the 13, still under the 12s actually. This is fascinating. The E-mini has gone to a leg G/C, and we're going to go through this because this is part of the Chapman Wave methodology. One of the things I'd say to subscribers to my opening call and all that, the more than a dozen charts I sent out over the weekend, was that the MACD, the moving average convergence divergence, is still very strong in the daily chart. It's still strong in the weekly chart. This is the 120-minute chart, and that shows you that it's made a peak D at 232,370, round number high. Pull back, now towards the middle to upper part of the range. The MACD is still quite good. Stochastic's holding okay, it's at 75%. What I'm thinking is this. Based on everything I looked at over the weekend, and I did a lot of studies, what I was anticipating, this I discussed on Friday, one of the reasons why we did not add any more shorts to the actual indices is that I'm anticipating there's just enough strength to go to a leg C, which we've done today by about a point in the 120-minute chart. Extend this Chapman Wave 5, leg 5 up, wave 5 up. It's leg C in the 120-minute chart on the right here. You can see with the MACD still quite negative, stochastic down at 67. And that's suggesting to me that we're getting to the toppy phase here, that there's not that much left. We just need to see it through for maybe a day or two. I need to get to, I don't have to, I'm just saying that in the Chapman Wave methodology, the simplicity of this particular waveform is such, if you recall, we want to see 4 higher peaks. And this is the look. You identify the lowest low bar, then you merely count each successively high peak. Peak A, B, C, D, uppercase. D is where other things can happen. It could recycle higher, all sorts of things. Now, what's really important about this, let me go back to the E-mini to show you that within the context of what we're looking at here, if I overlay it with the cash index, SPX.X, what we've got is a Chapman Wave stalk leg formation. It's really more pronounced than the Dow. This is leg C in the monthly, which essentially says that there should still be a D. Very bullish. But the weekly chart is in leg D. The MACD is very strong, stochastic's very strong, and on-balance volume is really the clue. You know, we all use on-balance volume different ways. We all use volume in different ways. I use it by using a running total. It's called on-balance volume, developed by, right here. It was developed by Joe Granville, and Tom used to interview Joe very often. Joe passed away maybe a year or two ago. What's really important about this is that you can see we've gone to A, B, C, leg D in the daily chart of the on-balance volume. That's the blue line. But the stochastic's at 96.74. That's just holding fantastically. And the MACD is still strong, but just showing a hint of wanting to turn down a little bit in the faster moving average, the green line, the 9-period differential. I'm calling this G/C, same as we were looking at in the S&P, in the E-mini. And now the cash has gone to a G/C. I would not even be surprised if we get to a G. Now, remember, we spoke about one of the things when I was interviewed by Tom, I think it was last week, I said, there's a very quick peak A to a peak B to a peak C, and then a leg D in the weekly chart. in any time frame, when you get a very quick series of peaks like that going to a D, you've got to anticipate there's a very sharp decline. There's only one exception to the rule. And that exception to the rule, look at this in the daily, it went quickly, A, B, C, and here's leg D, and it's called the floating ladder. Well, that ladder kept floating until 235, 130, 235, 131, 235, 16, until that little tiny dip that you can barely see. Well, that made a peak D. Now, I have no choice now because of the action to circle that and say, hey, that's like a Chapman wave instant restart. Once again, if you get a very strong extension in leg D, that essentially negates this quick A to B to C to D, and it says, hey, you could get a pullback in D, but that pullback will have very strong support now because of the extension to the upside, but only if the MACD and stochastic are holding well, which they are. So here we go. The S&P is up 38 cents. It's gone to a new all-time high, very quick. This is an alternate account, EA, F/B, G/C, and because of the speed, because of the way that everything's unfolding, there could still be a little bit of a pullback, and then we might get a D. But this is the area that I'm anticipating that we start to see some kind of a consolidation that sees lower highs and lower lows in the next 5 to 7 sessions. That's what I'm looking at. So now let's see if that works. We saw that in the Dow. Let's see if it works in the QQ. Well, the Qs are down 10 cents. Peak E was formed on Friday because there was a lower high below the 23rd of February's high of 130.70, and it's kind of stalling. And one of the reasons I think it's stalling is because the SMHs, the semiconductor market vector semiconductor ETF, is holding right here with only a 7-cent gain of 76.80. Is that because of NVIDIA, which took quite a dive? It's up, 3.14. No, it's not. NVIDIA is running quite nicely today. Is it because of Applied Materials, which made a G, I'm calling it a G for now, in the daily and has pulled back? Well, it is down 7 cents. It could stall here. So I'm watching the semiconductors and I'm watching the Qs very closely. Why? Because I suspect that we're watching some kind of tiredness, some kind of a faltering in the technicals in some very important areas, and that's really what I'm going to be studying quite closely. Because look at the VIX index. The VIX index is down. It's up 15 cents at 11.62, down from the high of the day earlier on. It was up at 12.10. Now it's 11.62, and it got hit by that resistance line. It got repelled on Friday. We're going to be watching this very closely, and this is saying there is some buying going on in the volatility index. At the same time, there is selling to say, we're not ready yet to turn down sharply, not yet. So now let's go to the IWM. The IWM was failing as well. Hasn't made this new high. There's a trend line right there. This is going to be resistance. So we'll see, because there's White House is speaking right now. Well, that's Donald Trump is speaking right now, or had been speaking. And so far, the reaction has been kind of mute. The Dow's unchanged, S&P's pretty much unchanged. So we're going to be watching this closely. When we get back, we want to look at the gold, we want to look at the dollar, we want to look at the euro, we want to look at bonds. This is a really important time to talk about bonds. And of course, we want to talk about the high-grade copper and crude oil. I'll be right back. Basil Chapman, Tiger Technicians Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's also look at platinum, I believe it is. Yes, ETFS platinum, physical platinum shares. PPLT trading at $99.85, up $1.60. Thanks, Mike, for pointing that out. New leg new A or an old E. This is really good action so far, but it's a leg B in the weekly chart. There's action here, and there's tremendous support in the 97s to 96s in this particular ETF. Hey, good eye. Now let's just go on. I want you to look at gold. See, gold is extending right here. It's up $2 at 1260.3. And one of the things we were looking at is within the techniques that I use, when there's a very important moving average, you see, this is the 200-period moving average, and gold has been trying. It was a resistance, a repellent zone, and now it has to become a support zone, and that is at around about 1243. But what's really important is that the 200-period simple moving average right here, which has a price at this time of about 1271, so 1272, that becomes a magnet. And that's what I love to look at. When a price goes below or beyond a resistance point, and then works its way, not halfway, it has to be within about a 1/3 the distance of the next focal point, let's call it. Could be a peak or a gap, or in this case, it's the 200-period simple moving average. It very often takes its cue as if that's a magnet, and it pushes towards that. It could even touch it. So this is very positive because the MACD has made a successful test and deflected higher. Stochastic's now at 88% in gold, and is trying very much to get into this candle. I discussed this in one of our views of gold quite some time ago, back in November, December, was that if at any point gold was able to get into the 13-15 area, there's a real good chance that finally it would test that inverted Chapman wave rogue wave that had a spike on the 9th of November. Remember when the election results were coming out. Gold had a huge move up, dollar plunge, and then by the end of the session, by the next session, they just completely reversed. And that says that gold has to get towards the 13.15 area, trade there for probably, since the daily chart, trade there for at least half a day. If it does that, there's a real good chance it's going to test the high, and that high was at 1343.60. But I'm looking at a continuous contract, and a continuous contract gets smoothed out, so the date is 100% correct, the price is 100%, sorry, the chart formation is 100% the same as anything else. The difference is that the price will be smoothed out. So maybe it's not 1343.6 by the time we get there, but it'll be that bar. In other words, halfway into the wick is really what I'm looking at, and halfway into the wick of the 9th. And then if it trades there for most of a day, it should then try to target the high. Silver, SI. Silver's in leg D as well, and it's now above the 200-period moving average. And this is what I was saying the other day. It seems to me very quietly, silver's been acting way superior. Look at the way it's walked the 9-period moving average. Just 2 bars closed below the 9-period moving average since the breakout of the 29th of December in the daily chart. This is very good action. MACD is good. Stochastic's 88%. And I'm suspecting that we have to look at the way the dollar's acting and reacting, and that peak C1, remember I said, let's call it a peak C2, which acts like a D. This is going to be very important. I'll tell you why. Because if the dollar trading at 100.93, down 16 cents, takes out the low of 100.66 that was made on Friday, no. Closes below it. It can take it out, that's fine. But if it closes below it, immediately you're looking at the left side low of 100.41, just 20 cents lower. And if that's taken out, dollar is going to be pulling back a lot more as gold rallies. And I continually think, and one of the reasons why we're trying to hold on to our goals is that I continually think that there's an inflationary aspect here in the market that the Fed wants to see, and is also very nervous at the same time about it. Number two, I suspect that gold is a fear play as well in this environment. Many of the countries are saying, we don't really know what's going on. I mean, so far, not that much has gone on. A lot of words have been spoken, but we don't know. One morning, someone could say something in this administration, and by an hour later, it could be refuted by one of the administration, another person, and here we are. We're kind of stuck, not knowing. The reality is that there is a focus in this administration that is different to the last administration, and there's incredible adverse, as you heard in the Oscars. Well, I only listened to a little bit of the Oscars. I've stopped years and years ago watching the Oscars because it's just so political. And you know that if it's a human rights thing, then a human rights film gets it. If it's a women's rights thing, women's rights it gets it. It's just it's the trend of the year that is really an issue, and it's not the movie of the year. So as far as I can tell. So I didn't listen to much. It was an interesting little aside I had here with one of the Denners who said to me, Charlene Theron, we called it Theron back in South Africa. Theron, they say here. You mentioned the name, and I said, no, she was born in the town right next to where I lived as a teenager. I was born in Cape Town, but as a teenager I lived in a little mining town just near Johannesburg on the Vaal Reef. So some of these Harmony mines, some of these were right along that reef. And I've been shocked at that she has absolutely no South African accent. I said, it's amazing. She has no South African. I can pick up an accent in a split second. Most South Africans can hear it. You just hear it. And then he sent me something to look at, which had a whole interview. And in the interview, she's asked, and she said that she left Benoni. That's the little town that she lived in. I lived in Brakpan. That's Brak is the dirt that you get from the water from the mines. Pan is the pan, like a dam. So she said that she left at the age of 16, and she got mostly an American accent. But really, I don't hear any traces of it. Anyway, So back to our story, politics. Nope, let's just get on to why I think gold is an issue. Gold, I think, is an issue here because gold is seen in the sense of as a safety haven, as bonds were. I'm thinking that gold is going to be, and that there's a tremendous cushion for gold. And therefore, you do want to have something in gold. You do want to be participating in the gold move. So we have, we've taken some profits, but we're still in the golds, and we'll see what's going to happen. We do have a short on the Dow, small short, but we haven't added too many. Now, the question in the den was, and we'll go to it right now. Basil, can you review SOXS? So SOXS is, in fact, the 3 times short the SMHs, the market vector semiconductor index is trading at 840. We were in it. We took a loss at 2.3%, I think it was. Loss. I didn't want to hang around. I will be back. But my thinking here is that it's probably the SMHs that's a better short in the sense that you have a little bit more leeway. This moves so quickly. I just didn't want to hang around too long. At $8.40. I mean, you're really. Okay, I'll be back. Basil Chapman, Dow's down 5, S&P's down 0.21. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're looking at right now the SMHs, which is at 76.75. This is the market vector semiconductor ETF. I had a question in the den. For someone who has the 3 times short, I'm looking at this, and my suggestion here is that keep your eye on these parameters in the SMHs, trading at 76.74, just up a penny right now. If there is a move down of of a point going to round about the 75. Actually, no, it just needs to go under 76. There's a real good chance that we're looking at an H pattern in the daily chart because the technicals are very weak. But it's the weekly chart that I spent some time over the weekend, showed subscribers. You see the move that went to a peaky, a very modest peaky, because you went from a high a week of the 27th of January of 75.85 to 75.80. Big deal, 5 cents lower. But this is what my whole work was about years and years ago, decades ago, on the Chapman wave methodology. It was discovering that just a fractional move, because I came to this from a price. Let me just, I can't recall. Anyone in the den, give me any mutual fund symbol. I want to type it in. I should know them, but I just haven't looked at funds for a little while. If you can give me a mutual fund symbol, I'll type it in. But if you look at your mutual funds, you get the closing price and the daily. Then the weekly and the monthly give you the intra-week. So here we go, FCNTX. Good, whatever that is that probably a Fidelity FCNTX right there. Yeah, so you see, this is what I used to do. I used to join these bars. So I would go A, peak A, peak B, peak C, peak D. Brand new. A, B, C, and we've just gone to a D in whatever this is. Fidelity, Contrafund. I should know this, Contrafund. In fact, my wife has one of these Contrafunds. Okay, so the Contrafund made an all-time high. I think it's an all-time high right here. And this is, what's his name? He was one of the brilliant stock pickers in the business. Danoff is his name. And look, so that's made a D. And that's on a closing price. In other words, I join the lines. That's all I'm doing is counting each one. So that's one way of looking at a waveform. And the other is, so that was the point. And within the context of looking at charts like that, let me just go back to this what we're looking at is within the context of looking at the SMHs, what I would like to see is that the weekly chart, my point was that even one little penny I learned made a big difference on that closing price chart. And now what we've done, we've extended, this is still leg F for the entire week until the SMHs go to 77.83, 1 penny higher to extend this. That's the most important thing. What I'm really looking at is when I say a point down, you get a 76.71. If you go down a point to 75.71 right there, 75.70 right there, you're within an eye blink of taking out last week's low. So let me make it clear. If by Friday of this week, the SMHs have taken out 75.50, now I'm not going to make it this week. You can even, if there's no new high this week, and by next week, Tuesday or Wednesday, it's taken that out. 75.21 is the 9-period exponential moving average. The first time it'll close under the 9-period moving average, if it happens this week or next week, since the week of December the 2nd. And it seems to me, if I'm looking at the MACD and the stochastic, why is it so hard to see here? Let me just raise this a little bit. There it is. You see the MACD is getting closer to crossing negative, but it hasn't. And until it doesn't, it's saying there is some support. So the SMHs to me are the weaker area. It's the weaker area. If you want to look at the IBB, a question about that. Nice bounce. Now what we've got is the Chapman wave falling X formation right there. Just taking it out. And you can call that lower highs and lower lows. Much lower lows and lower highs. And now you've just broken that out. So this is what I wanted to talk about. My biggest question is there going to be a rotational correction this week? In other words, could the semiconductors be pulling back? While at the same time, there are just enough stocks within, let's say, the QQs to alleviate any weakness from the semiconductors within the QQQ series. And instead, that QQQ manages to push higher so that you're getting a rotation going on, a sideways rotation, as some areas are weakening, but there are just enough areas of strength to say, okay, we're holding well. So you have the QQQs. They need to get above, I said that a little earlier, 130.70. Okay, now in the context of what we're looking at, I suspect we need to see the TLT, which is trading at 121.80. It's broken out in our leg C. Still with the pattern that I keep talking about. I can actually make this one big arch, but I'm going to be a little bit fussy. I'm going to make it two little arches right here, like a lowercase h that goes to a lowercase m. So you can still get bounces in the TLT. My suspicion is that this stock market won't pull back sharply until the TLT gets to the 123, 124 area. The VIX index gets to the 13s, and instead of having this mild kind of choppiness, the S&P futures open down 12 to 15 points and close, regardless of any intraday rally, close towards that level. That's a bear phase, and I just don't see it quite happening yet, not if you've got so much strength. Look, the crude oil is another area. Look at the crude oil. Crude oil right now is up 17 cents. That's no big deal. It's stuck in a range. So crude oil, there were times when if crude oil moved higher, the market turned around and moved higher. I think we've got a little difference now in that the crude oil is just stuck in a range. You remember I spoke about it. I said 54s, 55s, maybe on the upside, 52s, 51s on the downside. Until we see a significant break of one of those levels, I just don't see it. So yeah, we can go to the questions. The one question, let's go from XOM. So this is the oil service. XOM, nice bounce at up 53 cents, but not when you put into the context of where it's been. It's trying to form a base. Now, I suspect, let's see, this is XOM, ExxonMobil at 81.61, up 53 cents. CVX, that's Chevron. Chevron right now has a better move. Remember, I've been saying Chevron has a better chart pattern. And if you're looking at chart patterns, I prefer, if you're looking at a dividend stock and you want one of the oils, the big oil multinationals, CVX is a way better one than the others. What is COP again? Is that COP is ConocoPhillips? Yeah, ConocoPhillips is okay. I think Chevron is much better than the two others. So that's what. Now the next question is telephone and Verizon. Telephone down 51 cents at 41.85. We are actually long telephone. I'm anticipating that it's going to hold quite well. I'm trying to hold it as a dividend stock. I'm not going to give it too much, believe me. We are up, but that might change. Verizon right now pulling back. So Verizon. Interesting. Verizon is down 64 cents at 49.95. Out of the two, let me just do this again. Yeah, out of the two, I have no question. I think telephone is much better than Verizon. So that was that question. The transportation index, IYT. Yeah, it's up a little bit, 11 cents. But I think that the transportation index is going to be part of what I'm looking at in the package. So if the transportation index fails from here, we're going to watch it. I'll be right back. Basil Chapman, I can take questions out. Bars down 7.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. So we're back. Question about XOP, which is, I always forget the exact title, is Spider S&P Oil and Gas Exploration. And it is trading at 38.11, up 24 cents. Between the 200 period moving average and the 200 period simple moving average, MACD is very poor. Stochastic is down at 19%. But I think that there's going to be a little bit of a bounce here. But I don't think it's out of the woods yet because of the way the weekly chart is acting. I suspect that it's going to test the low that was made the week of the 2nd of December of 37.03, just another point down, and that's going to be the big test. A close under that is a problem. A bounce right here says 38.91, the 9-period moving average, to 38.25. That's the area of resistance that I would like to see in a bounce. So let me just sum it up this way. I think that the exploration has had a spectacular move over the last many months. Now, in going into 2017, it's just been faltering, and I don't think it's quite done. It almost looks to me like it's got a 1-to-1 to the downside. I think the test of the 37s is going to be really important. And then if it does hold, you can have quick trades. You can go to the oil and gas exploration companies for real quick trades, but you want to see them actually working better. Let me just see a rig. Yeah, rig's already started to move up in leg B. So if rig is able to stabilize, this is maybe one that you can use. I'll put it down, make a note of. I'd like to do a little more work on it. Maybe I'll talk about it again on Monday. But right now, rig is showing that the pullback in the weekly chart from that really sharp move up is starting to stall on the downside, meaning there's some upside support. So yeah, I'm going to just say I think they're getting ready to have at least a bounce. Next question was the New York Stock Exchange NYA.X. You see, this is what's happening to the Qs, the SMHs, the NYA. There are certain of the indices that are suggesting to me that they are beginning to stall in their upside momentum. But I don't yet have a trigger for a sharper move. I need a price move. And that price move in the New York Stock Exchange is not to be up 7, but to be down below Friday's low of 11,486. That's about 60 points down from 70 points down from here. And then I'm getting serious about the downside. I think this is just going to be a chop, chop, chop to the side, limited upside, fairly limited downside, but probably making slightly lower highs and lower lows from Wednesday on. That's kind of the way I'm looking at it. And then one question was about, I saw it here. Yeah, the transportation. Did I do the transportation? Transportation up 8 cents at 169.97. My thinking here is that it's exactly the same thing, and that the weekly chart is saying, hey, I'm beginning to stall, but I could be stuck in a trading range, maybe not breaking down. I'm suspecting it's going to be a bad news event, something that comes out, something news that comes out that is reflected poorly in the stock market. In other words, it doesn't always have to be bad news. It's just news that has a negative effect on the stock market. And then you want to see bonds, the TLT running into the 123s, 124s. You want to see the VIX index holding in the 30s. It can't just get there and then pull back, holding in the 30s. And you want to see the transportation index. I looked at CSX over the weekend, and I thought, okay, Buffett, I know Buffett has CSX. Look at that high-level consolidation, but it looks very much like the IYT. Look at that monthly chart, an incredible leg C. And we're going to be watching. We've had a whole month, and yet it hasn't taken out 49.13. It's at 48.47. This is very, very narrow. Look at that weekly. This is going back to when it never had those big spikes in CSX rails. And it's just been going sideways for months, and it hasn't broken out. Sorry, for weeks, and it hasn't broken out to a new higher high. So that tells me that if it starts to stall, the IYT, that's the this is the iShares Transportation Average ETF, has to take out the low of Friday, 160. It has to close under 169.70. You see that happen, I suspect that this market is going to start to pull back deeper. In the meantime, I just think we're rolling around. Isolated stocks are keeping things going. Now, one other thing I want to look at, what was the question? Oh, I think I lost it. NYA Transporter, VZ, Exxon, Hidden Figures. Oh, that's just that's an email. Hidden Figures was really a brilliant story. Just overly done, Hollywoodized. It's just a shame that it was Hollywoodized like that. But what a brilliant story about these mathematicians, these black women that had the highest grades in their states in mathematics, and they were recruited by NASA. The unknown people. There's that incredible British story about these women who did the mathematical formulas for the computers. And it was just an amazing story. That changed the war. It took 3 years or something, but eventually they got it right. That was brilliantly told, a brilliant film. This one was a brilliant story that should be in textbooks or for kids all around the country, but Hollywoodized to the hilt, unfortunately. But anyways, as long as people see it, and that was Hidden Figures. So much for figures there. Let's go on. What I wanted to show you is this. I didn't talk about it. I should have done it earlier on. The 10-minute chart made a peak C1, C2 top. Let me show it to you with the technicals so we can discuss it in a little bit more detail right here. So here's the 10-minute chart, drag it across. There it is. So it goes to peak D, and then it has inside A, B, C. That could have been E. I called it C1 because it was a C2 over there with the fading technicals, because it's just easier to demonstrate this particular technique, peak C1, C2. Yes, Jim Parsons was in there too. That's, what's his name from The Big Bang Theory? Sheldon. He was pathetic. He's really good in his own show, but in this movie, I think his part was just the wrong part for the wrong person, done in the wrong way. That's just my opinion. Anyway, 23, 64, 50, you see that A might fail. So let me just go through this. This is really important. I'd like to take a moment before we break. You see this peak C? There's no other way I can count it in the 120-minute chart, and it's suggesting to me that there's going to be, I love The Big Bang Theory. Actually, I loved it before. Now it's getting it's not quite as funny, not as brilliantly written now as it had been, or maybe we're getting used to it. Right, so this is what I'm looking at here. 20,841.82, just snuck above the 20,840.70 high of 130 on the 23rd of February. That's important because this is part of the pattern we're looking at. This 5 is still in place, Chapman Wave 5, but then it allows for one more high to be D coming up. And that should be not this bar, it should be after this bar is complete, this 120-minute bar. It takes 2 hours. So here's the other thing. The MACD is weak and the stochastic is rallying, but it isn't that strong. It's at 74%. And I'm suspecting that by tomorrow this time, we're starting to see some kind of weakness. And that weakness is going to be demonstrated. Let me first show you this. Here's the Dow. Here are my 2 Dow daily charts. This is E. This is just snuck to an F right here, but it's still Chapman Wave 5. I haven't got a signal yet to say that we're going to reverse. So that 5 is moving over to the right. And I suspect by this time tomorrow, I will have in place the chance of a sharper pullback. And right here, look, the MACD is very strong. And the stochastic's at 87.57. I still don't have a major signal. I think the signal is just going to have to be in the 120-minute chart, and we see where it goes. And the strength out there. I'll be back. Down.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're going to go straight to Scott in Safety Harbor. Scott, you are thrilled today, right?
Absolutely. I figured there'd be a little Trump bump because he's going to talk tomorrow, and he's going to mention the wall, and then there's already some things that happened about the concrete. They're taking bids on concrete, so yeah, I'm excited. I'm in the CX deep.
So let me just tell you something. You might want to use this in your own studying of chart formations. You see the doji candle that was. That little doji. There was a doji, folks. It's like a little plus sign. You open and close at the same price, and you've got a little bit of a wick on the upside and the downside. I use that as a particular study piece. I also use when I've got what I call a long-legged wick. I have a whole game plan that I tell subscribers what to look for. In this case, you saw that the move back on the 17th of February at 8.65 low had a 3-day bounce. The third day turned around and took out that low. So you've got to treat it now. There's a certain pattern here. What's really important is that the stochastic finally is getting to the 22% area. It's just about ready to try to turn around And finally, the MACD is trying to show a little bit of flattening out. However, it's still got the pattern of lower highs and lower lows. So I think that your idea of hopping in and hopping out still pertains to this kind of stock. Now, there's a chance that if it takes out at, folks, we're looking at CX trading at 8.80 up 27 cents. It moves very quickly. If it goes to 908, above the 907 level of the 21st of February, this is a very different pattern. It impacts the weekly and very positively. So those are the levels I look for. But in the meantime, I think your idea of, have you taken your profits or you're still in it?
I've got my finger on the trigger right now. I'm going to cash out with about a 20-cent. So that's, to me, and the amount I'm buying, that's a lot of money.
That's fabulous. That is excellent. Yeah. That is a lot of buying. So let me just do this. The 10-minute chart, leg A. Oh, it's still A. But it's what I call a chance of a single leg A. I think you're absolutely right. Keep your finger on the trigger and just it's still a positive pattern, but it'll become a negative pattern if it goes under 875, and right now it's at 879.
You know, I'm talking. You mentioned last week someone called, or well, I don't remember exactly what it was, but you mentioned Chesapeake, so I looked it up, and that seems interesting as well, as from a day trader's point of view. I never
now you see
looked at
what's really different. Chesapeake used to be a trader's delight intraday. I'm talking about back in going to 2014. Mm-hmm. Then it was a bear's delight because it smashed from the 30s down to the $3 and something, $1.50. So now it's in the area that I would not treat it anywhere other than a quick trade, and I don't actually see it. I would not put it in the same category at all. If, in fact, today, instead of being down 3 cents, it was, instead of at 562, Chesapeake CHK was trading at 583, I'd say, hey, Scott, perfect stock for you to go in and out. I don't think so. It hasn't formed the kind of base.
It doesn't meet all my criteria. One of my important criteria is I try to find companies that you really don't have to worry about them disappearing. You know,
Correct.
Like I used to trade Alcoa and BAC, CX, U.S. Steel. People forget. I mean, I was playing with it at $12, $15. I mean,
right.
It's just recently it's a big money stock. But these solid companies, particularly commodities, they're not going to completely disappear. But something like Chesapeake, I mean, it could. It could, just like Rig and Apache, you know, same thing.
Absolutely right. So stay. Now CX is back in play, but I would treat it just exactly the way you've done. At some point, I suspect that CX could, in fact, have a much bigger rally. But in the meantime, you're playing it correctly. Chop, chop, chop. Take your profits. Go home. There you are.
Thank you, Basil. Have a great week.
You too. Thanks for calling, Scott. Dow's down 17, S&P's down nearly 2. This is the chop period. I'm expecting a very choppy week, and at some point we're going to make lower highs and lower lows. We'll see when that starts. If it hasn't started right now, I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.